Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to another blockbuster market as the dollar index, which measures the greenback strength against the basket of six major currencies, took another tumble towards 103.35, sending or propelling most of the other currencies. Looking at the Australian dollar, this pattern surged through the midway point and now from the rebound of that 64.80 level, a key point just the other day, now looks towards the key level of the top side, which is at 66.30, and reassess from there. In a prepared remarks for Wednesday's congressional testimony before the US Senate Banking Committee, Federal Reserve Powell comments fueled expectations of a rate cut this year, but no doubt we were looking still at June. Papers are getting a little bit overexcited about the whole situation, but Fed did put a little bit of a dampener on that, as he said that the US Central Bank was uncertain about achieving its 2% inflation goal in his talks. Despite his earlier statement, the Fed did lay out a plan to cut rates later in the year and now anticipates June instead of March or May. Powell's testimony continues today, that is on Thursday, before the House of Financial Services Committee and tomorrow the Senate Banking Committee. Economic data reveals the US private payrolls slightly fell short of expectations in February, while the JOLTS report signaled a slight decrease in job openings and hiring in January. Investors are now waiting for Friday's non-farm payrolls report for further insight into the US labour market. The forecast suggests an additional 198,000 jobs. So looking at the technicals for the Australian dollar, as I mentioned, the top side level awaits at 66.30 and any pullback likely to be shallow with support seen at 65.35. So I did mention the US dollar tumbling. The market has found further momentum and pushes through that key level of 108.80 and now exposes the level of 109.35.40. As previously from my comments, I believe the market has potential to extend further onto 110 or back to these highs seen in December around 111. Looking ahead today, beside the US, all eyes look to the ECB or the European Central Bank interest rate decision. Although the market is expecting rates to remain on hold, there is a lot of chitter chatter that 25 basis point cut could be seen in June, like the US. Any pullback from the current pattern that we're seeing here in the euro, there is a little bit of divergence, but support seen at 108.65 and 108.05.15. So I do anticipate the bullishness, considering the ADX is still quite strong. The dollar yen, well, for the third day, the market has taken a heavy tumble. The ADX trend has strengthened, and also we're getting the technicals married up to support the bear case. As the market now picks off support one by one, the bottom side of the range now seen at 148.15.20 remains in sight for the bears, which could be achieved. A break there would give further scope to the downside and bring in a target around 146.35 to 50. The pound was also bullish and nearly claiming its topside target of 127.80. Do be a little on the cautious side, given that the fact that the last time we were at these highs, the market was relatively whipsawed, and you can see from all these tails from the candle that the closer we get towards 127.70, may see some profit taking. Technicals are showing a bit of divergence here, so we may see a rejection from 127.80 and look for a pullback to 126.90 to 126.35. Spot gold continues to dazzle on the yellow brick road as the market rallies on now through that blow-off top level of 2,140. In light of the pattern, though, we are extremely overbought and ADX is overheating, so we could see a 50-point drop anytime soon. That being said, though, we should not rule out contested levels around 58 to 67.70 and maybe finding a cap somewhere around closer to 2,180 to 90. Viewing the downside, support seen minor at 40 and then around 2,118 to 22 to 2,088 to 92. But I'm a little bit on the cautious side due to how extreme this indicator is, as it's hitting the wall you can see here, and therefore does warrant a pullback. Wrapping up with oil, well, the market rebounded on Thursday and finding its topside target, which is around 78.80 to around 79.65. In light of the technicals though, I'm still not ruling out that we could eventually reach that 81.83 objective given from the inverse head and shoulders. Any pullback should find support around $77.65 to $76 a barrel, where I've outlined here. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the day.